Hey traders, Ivan Delgado, Max's commentator at Global Prime Brokerage firm. So it is Monday, and that means that I am going to be distilling the technical outlook in the main forex indices. Remember that these views are relevant and actionable for both the members of my mentor room. By the way, you can find the link below in the description box, but also for those that are participating in the public channel of the Discord in Global Prime. So if you want to really get the outlook and the most pristine analysis when it comes to currency indices, unlike anything you might see out there, then this is the video that you want to keep watching. Okay, it is going to be providing heads up in terms of what are the currencies most attractive to either buy, sell, and what really are the dynamics currently at play in the forex arena. So without further ado, let's get down to business. Remember that this is an analysis that I get to conduct by technically studying the currency indices on an equally weighted basis, okay? And then I put what I would say is a very objective and factual based view of what are the conditions that each of these currencies are going to be facing. So the first market that we are going to be analyzing is the Euro Index. Here we saw a flurry of buying, and that buying keeps clashing with a huge resistance. So essentially what we've seen is back-to-back attempts to poke through this resistance, and so far it is yielding limited gains. This action actually tends to typically result in an eventual exhaustion of buyers. We had all this pressure that was followed by a second week of even more pressure, and that has been well absorbed, and that gets to be portrayed through these back-to-back weeks that we've had. And also remember that this location that has been tested for a couple of weeks, it is perfectly in alignment with not just with this horizontal level of resistance that has proven to be very, very reliable. If we actually go back in time, you'll notice that every single point that I am highlighting here, that actually represented a rejection of price, and once that area gets to be surpassed, the backside retest is what gets to be rejected. So a very, very influential location for the euro right here. But as I was saying, it is confluent also with a 50% retracement from the late 2020 and early 2021 dominant bearish cycle, and this is the one that I'm referring to. Notice that here we had a successful rotation back down, broke structure, and this happens to coincide by dragging a Fibonacci type retracement. We would be now retesting what is the 50%, the midpoint, okay? Even though that's not a Fibonacci number, it is a very important area to be to be paying attention to, especially if it's confluent with that resistance. All right, so bottom line here, I guess, be wary to belong the euro this week nearby this vicinity, because gains have proven to be much harder to come by, and solidifying a footing above and finding that acceptance above this resistance really is high in the priority of buyers if they are really to inflict further pain against the sellers. Otherwise, we might see an eventual rotation back down because of that exhaustion that I was talking about. Okay, so that's my view on the Euro Index. Now, Chf Index, not much really to add from the previous week. We've seen buying slowing down where you would be expecting. Let me just scroll down, zoom out the chart a little bit. Notice here that we have this really important structural point, and that's where the CHF has been struggling. As I warned in previous reports, the currency has so far really struggled to record further gains based on the intersection of this level, which, as I said, constituted a major isolated point, and that obviously makes it structurally wise very important. Now, I've speculated that the Swiss franc may see a topping formation around this point. This might see further evidence of my view playing out if we see that the price now takes out the previous candle low. a break of this week's low, the previous week's low, would be, as I said, the evidence that is needed for sellers to potentially end this 2-month and a half long correction that we've seen and eventually just retaking control. We will wait and see. The jury is still out there, but certainly an area where playing long positions is rather irresponsible. Now, when it comes to the US dollar, we had the tightest range period since the beginning of the year. So essentially what I'm talking about is that we have gone nowhere, and we have to go back all the way to the early stages of 2021 to see a price pattern that was similar to the one that is playing out at this point. So essentially, the bottom line here is that back-to-back dodgy candles, the likes of what we've seen in the previous 2 weeks, it is for now sending a clear message of how indecisive this market remains, and the stalling of this price at this very yearly low with volatility suppression, very low amplitude of movements, tends to be, not all the time, might be just that we range and we keep ranging for a month or so, but this tends to be a precursor of an expansion in volatility in the next few weeks. The jury's still out there, what direction we're going to go, but that is, and this is very important, whenever a market enters a range, I always tend to assign the higher probability that it's going to be breaking in the direction of the dominant trend, as that's proven to be, especially through this year, and actually especially since the high of the COVID-19, this has proven to be hands down the path of least resistance. So you would be suspecting, obviously you cannot have a view that is going to be fixed in stone, but you would be suspecting that all this sell side pressure, and once we form this type of range, we would be finding a resolution in the direction of the dominant trend. And if that is the case, I really believe that this is the key for the forex market overall to see a pickup in volatility, because we've certainly been treading water and going nowhere fast in the forex market. So I would reiterate where I stand in this market, and that is that if we see that the US dollar breaks lower, brace yourself, because I believe that this is going to create an acceleration and an explosion in volatility and acceleration in losses for the US dollar. Okay, remains to be seen, but prep yourself. Now, JPY index, sellers continue to enter this market, and we've now reached the 100% projection target. So what I'm meaning here is that whenever we have a break of a range, as it was the case right here, we will typically see that an asset, an instrument, in this case the Japanese yen index, travels to the next 100% measure movement target, and that is the projection that right now has been met. Now, shorting the yen has been paying off consistently over this year, as you can tell, and there was a little bit of a brief bump along the way, and that was the creation of this range right here. Once this range has broken and we've now reached the 100% projection target, please, I do believe that this warrants caution and be more prudent, because it typically sees market makers, contrarian traders, and those that are having an interest to collect profits of the market to slow down this movement, and potentially that leads to a proportional retracement. So if you're looking to short the Japanese yen, I would say that structurally and momentum wise it makes an awful lot of sense, but we seem to be rather overextended in this movement. The amplitude has been such that we've reached the 100% projection level. Okay, so that's my view in the Japanese yen. It is very much bearish, but it looks like too expensive to be shorting this currency at this point. Now, the one that to me hands down presents the best technicals this week is the GBP. GBP has buyers in full control, and these buyers are getting away with finally a key breakout of resistance. And notice that if we go back in time, there is no visible pivot points up until that very high, and that will actually create a void area of about 1.5%. So again, out of all the indices that I've scanned, the pound certainly looks like the one that has the most promising prospects to build up on its recent gains. This view, as I said, is backed by buyers finally culminating an important technical milestone through the acceptance beyond this resistance, and this is resistance that you could have aligned through the closing period of these candles, these weeks, and also going all the way back through this highs that we saw back on February the 20th this year. Okay, so this to me is incredibly bullish. Also notice that on a candle by candle basis, it has also merit on its own, because we saw that sellers were initially taking out the previous week low, and that has fully reverted. Whenever that's the case and we have the creation of this bullish engulfing bar, brace yourself, because typically that leads to a follow-through continuation. Up next is the Chf Index, and the Chf Index really is a currency that continues to defy the gravity, I guess, and buyers have been very, very stubborn at these levels. Now, last week we saw the very first signs of weakness in the Canadian dollar in 6 weeks, yet buyers kept returning in earnest to beat the currency back up. Now, this strong buy-side interest, you can see that portrayed through this week, continues to signal to me that there is a real possibility that we keep breaking beyond last week's high, and this obviously is going to be endangering the outlook for those that have been looking to be contrarian traders out of this very, very critical level of resistance. If you go back in time, you'll notice that the Chf Index tends to have massive reversals around this point. We've seen that initial sell side pressure emanating, but that so far has failed. Okay, so there are very few indications that are suggesting that the CAD is about to fall and fully revert. Now, macro wise, do bear in mind that this is eventually going to be most likely an area where the Canadian dollar is going to have a significant or meaningful rotation back down, but we don't seem to be there just yet. At least price action wise, it's not suggestive of that. So I guess bottom line is that there are very few signs of the trend reverting. Eventually, if history is any indication, ever since 2015, so I can even go all the way to 2015, there you go. Eventually you will see that the CAD has really struggled around this point. So if history is any indication, sooner or later we might see that this trend reverse back down with an enormous risk reward for those macro traders that are looking to see history repeat itself, or at least rhyme with the previous patterns that have emanated out of this location. Okay. Aussie Index, I should say. So Aussie Index seems to be en route to hit the 100% projection target, and that is just a whisker away right here. So essentially what that means is that I have the idea and the perception of the Aussie really not providing a great deal of downside left for those that want to be supporting the downward direction. Now, the reason being, as I said, is because this 100% projection is about to be hit, and therefore this would be completing this sell side campaign that started off the breakout of this previous range. Now, this calculation of the 100% projection, remember, is always going to be predicated off symmetrical patterns that are going to be based upon this bracketed area, and once hit, and if that 100% projection identified happens to be in alignment with other areas such as this structural low right here, that only reinforces and places more weight for this area to really signify a rotation out of this downward pressure that we have seen in the previous 3 weeks. Also notice that the Aussie Index underlying trend has been to the upside ever since the COVID-19 low printed in March last year. So bottom line, be prepared, because I believe that the Aussie might soon find a bottom around this point. At least this is a great candidate in terms of the location where the Aussie Index is going to find itself in a very near future. And as I said, this is a compelling area to look for buy side opportunities because of the confluence and the major alignment with the underlying trend that has been at play ever since COVID-19 lows. Up next is the New Zealand Index. This is the last chart that I'm going to be analyzing. And last week, remember that we had a major surprise in the form of the RBNZ, the Reserve Bank of New Zealand, sounding more hawkish than the market was expected, and many players were caught by surprise, and that is depicted through this markup in the New Zealand Index, which is comes in stark contrast with the behavior we saw in the Australian dollar. Now at present, the Kiwi has once again landed at a very familiar and key resistance level, and that contextually wise constitute the top of its 3-month long range. So if you were to account the range ever since the identification of these candles, which eventually that turned out to be the top of this range, you would think that this, we can have a rough estimate that this range has been in play for the last 3 months. So I would say that long in the Kiwi into this resistance really warrants prudence, as the upside is going to be for the most part limited until more technical evidence exists. Just as I warned to be cautious shorting the Kiwi last week, because notice that we were looking to trade and we had landed at this key area of support. The same can be said this time around. You really need to allow the instrument to poke its head and find equilibrium beyond this area before you can place safer bets. And the reason, as I said, is because we really want to always listen to the messages of the market and find out whether or not buyers are going to commit themselves to really break this tough nut to crack. And if history is any indication, you really want to be, as I said, very prudent, because as of the last 3 months, every single time that you've wanted to long the New Zealand heading into this level, it has turned against you. All right, so with that, I would conclude today's video analysis. I hope that this has been something that you appreciate, content that you can incorporate as part of your decision making process. I hope also that if you have further questions, you reach out to me, because I make myself available. I'm at your disposal through the Discord room, and I absolutely love when people contact me and want to clarify further aspects, because it really comes super high on the list for me to educate people the right way when trading the financial markets. Either it is traditional assets and also obviously including the crypto space. So until the next video, it's bye for me. Cheers.